Today we're going to be talking about consumer credit and what it is. The importance of consumer credit to the U.S. economy. Basically, if we didn't have credit in the United States, the majority of us wouldn't be able to purchase the things that we have today, including our homes, our cars. We're going to be talking about consumer credit and what it is. The importance of consumer credit to the U.S. economy. Basically, if we didn't have credit in the United States, the majority of us wouldn't be able to purchase the things that we have today, including our homes, our cars, and education, and a lot of the products that we have. So it's a major force in the United States economy because it allows us to buy things that we may not otherwise have the ability to buy. When it started back in the colonial times, and originally it was only a privilege of the rich. And then we had installment credit that started being accepted in the 1900s. There's some factors that we need to consider prior to using credit. First of all, we need to ask, do you have the cash that you need for a down payment? So if we're going to buy something, you always want to try and put a little bit of money down so that you don't have to finance the entire purchase. Second one, do you want to use your savings instead of credit? Third, can I afford the item? So if I am using credit, can I afford the monthly payment or can I pay it off in the future? Next we have, could you use credit in a better way? After that we have, could you put off buying the item for a while and saving money on your own? And then finally at the bottom we have, what are the costs of using credit? So you have to pay some fee in order to even use credit. So you're paying an interest rate, you're being charged an interest rate for you to borrow that money over an extended period of time. Alright, the advantages of credit. Obviously we enjoy goods and services now when we may not have the money up front to pay for them. We receive discount coupons and advance notice of credit, so you know when you have to pay. And it's also a possibility, depending on the type of card you have. You might have a card to a certain store, and then with that you also get discounts because you're using that card, but it's always best to pay it off right away. It's very convenient, so you can use your credit card for everything, for all your monthly expenses, and then pay one bill at the end instead of separate bills along the way. You can combine several purchases into one payment. You can record expenses and then use credit wisely, and you may be viewed more as responsible and then able to take out better loans and get better interest rates in the future. Your disadvantages of credit, obviously it costs money. Like I talked about before, you have interest rates that you need to consider. A lot of times there's a temptation to overspend because you do have that available credit line and you see something that you really want and you need to make the choice of whether you need it right now or whether you can save for it, or again, whether it's a want or a need. It can lead to trouble if you are racking up a lot of credit card bills. You can lose your good credit reputation, which means it'll be difficult for you in the future to get loans, buy a house, go to school, those kind of things. And then you may lose your income or property if you're not paying your bills. Types of credit. We have closed-ended credit, open-ended credit, and a line of credit. Your closed-ended credit is a one-time loan that you're going to pay back in equal amounts over time. Your open-ended credit is borrowed money that you're borrowing for a variety of goods with a certain credit limit, so like a credit card, for example. And then your line of credit is a maximum amount of money that the creditor has made available to you. Sources of consumer credit. We have loans and then we have credit cards. So under loans we have car loans, we have mortgages, which is your home loan. You can take out student loans, a home equity loan, which you would take out if, for example, you wanted to do some kind of improvement on your loan or on your home. So you're taking a loan out against your home, and then a personal line of credit. And then you also have credit cards, which have a limit, and each of those have different rules and regulations that you have to follow based on that.